Now let's bring the spotlight on someone that's building the next financial services powerhouse. They are there in multiple businesses. To understand the next chapter for InCred, please welcome on stage Prithvi Chandrashekhar, the CEO Consumer Finance InCred. Huge round of applause for Prithvi Chandrashekhar. Prithvi, thank you very much for talking to us. And, wise words of advice from the SEBI member. But how has it been for you as far as the regulatory aspect is concerned? Because InCred, it's seen such rapid growth in the last 8 years, right? And today I think you're there in 3-4 businesses. How has it been for you? For Bhupinder to kind of turn from a career banker at Deutsche Bank to building this financial services powerhouse?
So thanks for having me. And I'll keep my answer brief. I'm aware that we're, at the end of a long day. We're actually in 8 different verticals now.
Wow,
in consumer finance.
Looks like I missed 3 extra ones somewhere along the way.
And we also have InCred Capital and InCred Wealth, which are sister businesses on the same brand. To your question about the regulator, we actually try to engage with the regulator as closely as possible, understand what the intent of the regulator is and, stay within that intent. And to the point about, trying to speak with a unified voice, I'm actually in 2 such industry forums, the DLAI,
the Digital Lenders Association of India,
and FACE, which was mentioned earlier today.
Yeah. Which is a fintech SRO.
That's the newly appointed fintech SRO. DLAI hopefully will become an SRO shortly as well. And we really try and engage with the regulator on that. I could almost, validate what Mr. Anant Narayan was saying. We were fortunate to be in on a whole bunch of consultations with the RBI. In fact, shortly after the DLG came out, but a lot of the clarifications, a lot of the pragmatically, how do we make this work? Yes, they did listen to us. I think the deeper point is that what we want in the industry and what the regulator wants is basically the same. We want stability, we want clarity, we want to be able to attract investors who are confident that the goalposts aren't going to change. We want to protect the end customer. Our intent is very much the same.
Right.
On the other hand, we don't want surprises. I understand that sometimes it is needed, but when there is a surprising event in the market which hasn't been through consultation, which people aren't already talking about, that can create a lot of, worry, a lot of consternation in the system. But to answer your question as directly as possible, I think the key is just stay engaged and don't panic. In 8 years in India, we've lived through demonetization, GST, Supreme Court ruling on Aadhaar, ILFS crisis, DHFL crisis, COVID-1, moratorium.
Yeah.
Now recently the DLG, the comments about what is usurious and what is not, which we will discover. But I think it's also important, speaking to my fellow, operators rather than regulators, don't panic, stay engaged with the regulator. We can make it work.
Great, that's a good message. I think fintech founders after a point become motivational speakers because, they've seen everything, dealt with, all the knowns, unknowns, unknown unknowns and so on.
Yeah. But so to that, we actually had a session with one of our early investors, and we've been operational. We've been operational in India about 8 years now.
Right.
And about the many almost the, auto rickshaw swerves that we were talking about a few minutes ago that we've had to take. And Bhupi's comment was, in 7 years in India, you'd live through 21 years of experience in any other market.
Wow.
And I think that's great, right? That's part of the fun of being here. That's a part of the opportunity we're faced with. But that's also kind of the reality we're going to, deal with.
Right. You mentioned early on that InCred's now in 8 verticals.
Yes.
Which is your fastest growing one, which is going to be the one to watch out for in 2025, the one that you will double down on, triple down on?
The better answer is all of them will continue to grow.
That's also a diplomatic answer.
No, the fastest growth will be in our LAP vertical.
Okay.
Or more specifically, our secured business loan vertical. And that speaks to a couple of the themes that have been talked about on the stage through the day. The huge opportunity in secured, a lot of the explosions that we've seen in terms of, credit access has been in unsecured. And in business loans, a lot of the, fantastic growth we've seen has been in household or consumption finance. And that's pretty much waiting to happen in both secured and in MSME. And we are doubling down on that segment. So are many other players.
Yeah, in fact, we have a lot of MSME lenders in the room, from Mintify to Sarvagram to Flexi Loan. So maybe you guys can catch up after.
No, we talk quite a lot. But it is also something that the regulators are actively encouraging. It is also something that's much easier for us to do now than 8 years ago. Our cost of funding is different. Our operating leverage is different.
And it's also red hot this year in terms of funding. So
yes.
Yeah.
So that will grow, but so will personal loans. So will student loans. So will, our digital, anchor-backed digital loans, right? So we have a whole bunch of verticals, all of which will continue to grow. But the big move we're making is on secured business loans.
Right. But, at the same time, I think unsecured personal loan book constituted almost, 44% of your AUM today? And it's been quite a volatile year for this segment with the RBI tightening norms. So how did you sort of navigate that curveball?
Yeah, so this is the business I'm personally closest to and have been since inception. Really, the question there has been less about the RBI and more about a changing landscape, right? If you look at even the CIBIL data, or yesterday I got the Equifax report, lending in consumption loans, whether it's personal loans, credit cards, or consumer durables, is down in nominal terms about 7-8%, right? These are verticals where in the last 5 years we've doubled, and in the 5 years before that we doubled again. So in 10 years, the dispersal volumes in these verticals have increased about 4x. And suddenly in an economy which is growing maybe 6%, 7% in real terms, 10% plus in nominal terms, we're seeing a very sharp slowdown in dispersals. Now, obviously that's been, intentional slowdown from the regulator, but that has a whole bunch of knock-on effects on our, distribution partners, on the customers, cash flows, because this has happened suddenly, on, collections volumes, for example. So it's been actually, I think, dealing with a slowdown, which has been partly, prompted by the RBI and the tightening of rates, some of the regulatory actions they've taken. It's been less about specific regulations, all of which we've been well within for a long time. Right? I think it's really, the last set of big regulations we had was the DLG, which came out in 2022. And I think most of us in the industry have implemented them. But I think it's more about the rate hike, the slowdown in total lending, and dealing with the consequences of that, which we are dealing with, frankly, fine. But my view is that that's a temporary slowdown. In an economy which is growing at 10, 11, 12% in nominal terms, consumer credit will bounce back. That's the natural thing. And once the correction has happened, it's a question of when rather than if we will see the bounce back.
But do you expect the cost of credit to sort of, moderate in FY25? Or rather FY26?
The cost to us or the cost to the end customer?
To both.
I don't expect it to change a whole lot. I don't expect it to change a whole lot. I think it's been in the same zip code for a long time. I think there's been some talk about a clampdown on super high rates.
Yeah.
Say triple-digit rates.
And we saw that recently, right?
Yeah.
With Navi and DMI.
Correct. And that brought up the word of, what is usurious, and, I hope I'm pronouncing that correctly. It's come into the limelight now. And what is not, right? But a lot of those, super high rates often looked at in terms of APRs, including the processing fees. I expect there'll be a sharp reduction in those. But if you look at the weighted average borrowing rate for the end household, most of the volumes are done at fairly normal rates.
Yeah.
15, 18, 21, 24, very little above the 30% mark. And that's where most of the volumes are anyway. And I really don't expect that to change very much. That's driven more by risk profiling than by actually the cost of funds. The bigger cost is the risk cost. I actually don't expect that to change, even from a macro viewpoint, because as there are more and more people getting access to cheaper credit, as they kind of move up the credit ladder and access, say, bank credit, there are ever more hundreds of millions of Indians coming through who are still credit hungry and need credit to move up that ladder. So I really don't see that changing in the next year or even for some time. The top end of, eye-catching, what may be considered egregious rates, I think will reduce a lot. But if you look at the weighted average, given the loan ticket size, I don't think that will change much.
Right. And how do you see the overall consumer lending space? You mentioned a blip in terms of the demand, or a reflection of the overall growth that India sees.
I just want to be clear there. I think it's a blip. It's more about supply than demand.
Right.
I don't think there is much of a slowdown in demand. And if anything, as and when the landscape comes back to normal, as it will naturally, given the natural growth rates of our economy, supply will catch up with demand. If anything, there might be a little bit of pent-up demand, but really I'd expect it to come back to normal. The fundamentals which were true 10 years ago are still true. We're still a credit-hungry economy. We're still an underinsured economy, to one of your earlier panels. We're a fast-growing young country. Credit demand will return, and credit supply will catch up with demand.
Right. One big theme that we've seen this year is a lot of new age companies tapping Dalal Street, and the response of retail investors has also been very good. Now, I read that InCred also has IPO plans. You aim to raise 4,000 to 5,000 crore at a valuation of 15,000 to 22,500 crore, and you're targeting a listing in the last quarter of 2025. Take us through your IPO plan.
So this was today's news, right? And it was not something, that I or even Bhupi has proactively shared with the market. But yes, it is quite well known. We've been talking about, accessing the public markets for several months now. It's a question of when. To the point about we're navigating the downturn well, we've just had our half-yearly results, which we're very happy with. And it's something we're considering. There are many uncertainties on the way, including, to the previous speaker, filing with SEBI, getting the right, blessings, going through due process. So will it be by Diwali next year, which is what the paper said today? I don't know. I have no
prediction,
deeper.
Prithvi, then we can ask you in the next FinTech Conclave. Maybe you'll be listed by then.
We definitely will be listed. It's a question of, will it be Diwali or Christmas or Holi or when, right? But we will definitely be listed, and that's not a revelation. That was always the plan. And as a now fairly big NBFC in a very capital-hungry business, is that the natural path? It is absolutely the natural path.
Right.
And always was, right? And to, in fact, some of the other panelists and speakers earlier, we never were a tech company where our end customers are actually, buying tech and our product and our investor profile is a capital light business. We've always been a, on balance sheet NBFC, which is capital hungry. And therefore an IPO, you don't have to be a, fortune teller to know what's coming.
Right. Final question to you. You mentioned that you're in 8 different areas. Are there still 1 or 2 white spaces where perhaps, you're not there today, where you will be, say, a quarter from now?
A quarter from now, probably
not. A quarter
not.
of 2 from now. Let's say that 2 quarters.
Actually, no. Right? Because, very simply, it takes much longer than that to spin up a new business. That said, the way we think about our business is we're diversified for a reason. We love the stability and the risk diversification that we get from having multiple verticals which are not correlated with each other, and the operational leverage and the tech platform, the access to liabilities that all of that provides. The way we think about it is that every 12 to 24 months, we invest in a new vertical, discover the right operating model, the right price risk balance in that new vertical. The investments currently are happening in secured business loans. So perhaps if you'd said in the next 6 quarters, I'd have said definitely yes, but I don't know what it is. But in 2 quarters, actually no.
Great. On that note, thank you very much, Prithvi, and here's wishing you and InCred the very best as you pursue a diversified strategy. Thank you.
Thank you.